In a rapidly shifting economy, how can investors stay ahead of the curve?
That's the key question today. Experts like Danielle DiMartino Booth dive into essential economic signals that every investor should understand.
We have distilled their discussions into powerful AI summaries to save you time while empowering your decisions.
So get ready. We kick off with insights from Danielle DiMartino Booth at the Rick Rule Symposium, revealing critical shifts in market dynamics ahead.
And don't miss James McBlue as he unpacks the significant drop in home prices in the South. Could this be your next opportunity?
This is just the beginning. You won't want to miss Warren Buffett's warning on market bubbles and strategies from Tchir for navigating volatility.
Today, we're looking at insights from Danielle DiMartino Booth at the Rick Rule Symposium, focusing on evolving market dynamics.
Danielle emphasizes the importance of understanding economic signals that will affect investment strategies moving forward.
Danielle DiMartino Booth suggests that economic indicators are pointing towards potential volatility in the markets.
She advocates for a proactive approach to understanding these trends in order to better position investments. Danielle explains that understanding market volatility is crucial for today's investors.
So she advises having a diversified portfolio to mitigate risks, right?
Exactly. Volatility can provide both risks and opportunities.
How does Danielle suggest investors recognize economic signals?
She notes that understanding these signals can guide better investment decisions.
And she also points out specific sectors that might present growth opportunities, right?
Yes, she identifies these sectors as potentially resilient amid broader volatility.
What does Danielle DiMartino Booth predict for the markets in 2025?
She anticipates that some sectors will thrive even as overall volatility continues.
So her advice is to stay ahead of these shifts.
Absolutely. Staying informed will help investors adapt their strategies.
In conclusion, Danielle DiMartino Booth emphasizes the need for investors to be agile and responsive.
She's clear that focusing on sectors with strong growth indicators will be essential going forward.
Additionally, keeping abreast of economic signals will empower investors to make better decisions. Today, we analyze the recent trends in home prices in the South, as discussed by James McBlue.
James highlights the significant decrease in home prices, attributing it to rising mortgage rates and shifting economic conditions.
James McBlue points out that economic uncertainty is a primary driver behind the reduced demand for housing.
He also notes that rising mortgage rates are creating affordability challenges for potential buyers. James explains that the escalation in mortgage rates has made it more difficult for prospective buyers to afford homes.
This leads to fewer sales and ultimately drives prices down. James discusses how broader economic concerns are making potential buyers more cautious.
He highlights that fading buyer confidence could further exacerbate home price declines.
What does James predict for the future of home prices in the South?
James McBlue forecasts that if mortgage rates remain high, home prices may continue to decline.
However, he believes that intervention from the Federal Reserve could stabilize the market. James concludes that potential homebuyers should keep a close eye on interest rates to act decisively.
He recommends that investors consider the current market dynamics, as prices potentially offer new opportunities.
Today, we're examining Warren Buffett's thoughts on market bubbles.
Buffett highlights that many assets might be overvalued, creating risk for investors.
Warren Buffett points out several signs that indicate a growing market bubble.
He warns that excessive speculation and inflated valuations are concerning for investors.
Buffett notes that current asset prices greatly exceed historical norms.
He warns that this overvaluation might lead to major market corrections.
Buffett alerts that heightened speculation is raising financial risks.
Investors should think about the long-term impacts of their decisions.
Warren Buffett predicts that if market bubbles persist, we may face a correction of around 20% or more.
He believes this volatility will likely increase as market conditions shift.
In conclusion, Buffett suggests that investors assess their exposure to high-risk assets.
He recommends focusing on undervalued stocks and staying updated on market trends.
Today, we're exploring Dr. Emily Brown's insights into Japan's bond market.
Dr. Brown presents an analysis of the low-yield environment and its potential effects.
Dr. Brown observes that Japan's bond yields are exceptionally low.
This low yield is mainly due to the Bank of Japan's policies aimed at stimulating economic activity. Dr. Brown explains that extensive monetary easing has impacted bond yields.
These policies are essential in combating deflation, but also present challenges. What does Dr. Brown share about the sentiment among investors?
Dr. Brown notes that many are cautious, making risk-averse decisions.
Investors may lean towards securing safer assets, given the circumstances.
What can we anticipate for Japan's bond market in the future?
Dr. Brown suggests that changing global conditions may lead to adjustments in Japan's yields and strategies.
Dr. Brown concludes that it is essential for investors to track international trends.
She recommends diversifying portfolios to mitigate risks associated with the low-yield environment.
Welcome to our review of Peter Tchir's insights on the current economic outlook and its implications for investors.
Tchir emphasizes the challenges ahead, highlighting key risks for the markets.
Peter Tchir raises concerns about equity markets, noting potential overvaluation amid economic challenges.
He warns that rising uncertainty may increase market volatility. Peter Tchir notes that various indicators are signaling a potential downturn, particularly with declining consumer spending.
This trend raises concerns for businesses' profitability. According to Tchir, central banks must navigate carefully to avoid exacerbating risks.
He highlights that policy changes could either assist or hinder recovery efforts. Peter Tchir advises investors to prepare for possible market corrections.
He suggests focusing on defensive stocks to manage economic changes. What does Peter Tchir predict for future trends?
He foresees heightened volatility with corrections potentially between 10 to 20%.
In conclusion, Tchir emphasizes preparation for increased volatility.
He advises investors to focus on long-term resilience.
Today, we discuss the recent layoffs at Intel and NASA, highlighted by industry analysts.
These layoffs reflect significant shifts in workforce management within the tech and space industries.
Experts indicate that Intel's job cuts are strategically aimed at increasing operational efficiency in a tough market.
NASA's workforce changes illustrate its current budgetary pressures. Analysts stress the importance of operational efficiency for Intel amidst rising competitive pressures.
This reshaping may reflect an industry-wide trend among tech companies.
Analysts have noted NASA's cuts as a result of stringent budgetary limitations.
The budget shift implies a focus on critical space missions.
Going forward, analysts predict ongoing layoffs in the tech industry as firms cope with economic instability.
Yet signs suggest NASA may resume hiring if financial circumstances improve.
Experts conclude that firms must adopt proactive measures in response to market dynamics.
Successful realignment could foster innovation within the tech and space industries.
Wow, what an insightful journey through the perspectives of these financial experts.
Definitely. Each guest brought something unique to the conversation.
Dr. Emily Brown shed light on Japan's bond market, highlighting the risks of low yields.
And then there's Peter Tchir, who really stressed the implications of central bank policies on equity markets.
Plus, Warren Buffett, always keen on caution, warned us about potential market bubbles.
Right. And let's not forget James McBlue's insights on housing trends, especially with those rising mortgage rates.
It's crucial how Danielle DiMartino Booth suggests we shouldn't shy away from volatility, but rather find growth in it.
Agreed. And while they had some common ground on the need for cautious strategies, their disagreements were fascinating.
Absolutely. The contrast between Buffett's bubble warnings versus Booth's growth focus really highlights the challenges we face.
And if you found this discussion as valuable as I did, make sure to like and subscribe for more expert insights.
Your support helps us keep bringing you top-notch analyses and the latest in financial trends.
Stay tuned for our next video. We'll dive deep into emerging market dynamics.
You won't want to miss it. Thanks for watching, and see you next time.